why the market always goes against you many times after you've bought a share, then share prices started to drop? Is it because that the market doesn't like you? How do we overcome this situation then? M+Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at M+On. Have you ever wondered why the market always goes against you many times after you've bought a share, then share prices started to drop? Is it because that the market doesn't like you? How do we overcome this situation then? M+Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz. you ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
All right. Okay. Hi. Good evening, everyone. Okay. Good evening. Thank you for joining our section on Thursday. Okay. We are having this section about more towards a beginner section. Okay. Talking about more towards the crucial 3M. Okay, which we're gonna cover, which is money, mind, and also methodology. That's personally, I think that is very crucial, and also it play a very major part in determining your trading outcome. Okay, yeah. So thank you for joining our section today. Okay, so if you can hear my voice clearly, or you need me to be louder, okay, please type in the comment. Okay, so that I can know, and also we can have a better session. Yeah. All right. Okay. So good evening, everyone. This is Elkie here with you guys today on this wonderful Thursday night. Okay. Today we had one pretty much okay market. Okay, we can see our FBM KLCI is up by 8.74 points at 1420 to close at 1420, while our the sentiment still more towards sideways, and we can see there are still some weakness on the market. Okay, where we are seeing only 332 counters up and 454 counters down. Okay. All right. Okay. You hold on a little bit. There's some section. Okay. Let me share my screen. Okay. All right. Okay. Okay. All right. Okay. So, yep. Okay. Yeah. So, in today we despite on talking on how to engage in the market when the market is a little bit more towards selling down trend nowadays. Today we're gonna do some other thing. Okay, some other things that I think is good for us to review and also try to think through during this period of time when the market is a little bit quiet, and also help us to prepare ourselves when the market start being active again. Okay, especially yesterday we had seen the US inflation data has posted 9.1%. I think it's the record high for the past more than 20 years. Okay, and there are a lot of speculations and also bad things that by end of this month the FOMC, the US Federal Reserve, gonna hike the rate more than 100 basis points. Okay, so definitely we do not know what gonna happen in this market, but what we can do is we can prepare ourselves, we can get ready and be ready for any events that are gonna happen. As long we know our direction, we know what we want to do, and from there we're able to make a better decision from there. Okay, and that is the reason why we are having the section today, which is we're gonna look through all these 3M's that I think is really important, especially for one who are serious wanting to make money from the market. Okay, so any of you guys right here, are you serious about making money from the markets? Okay, if yes, then you type yes in under the comment. Okay, I hopefully I can see it, a little bit more yes. Okay, yeah, I know this year has been the market has not been really has not been really good to us. Okay, but this is part of the process, because today we are here, we are not trading just for 1 day 2 days, but we are consistently engaging with the markets, and this is part of the cycle whereby they are down cycle and eventually they will be up cycle, and what we need to do is we get ourselves prepared. So, all right, okay, Aru, okay, yep, Aru say yes, let's do it. Okay, so the ideas and also the information that I'm gonna share today right here, they are purely my opinions, and also I'm getting all this information and teachings from a mentor. He is a very great trader and has been trained a lot of professional traders. So all these things that I'm gonna share with you guys today, I'm gonna combine from all these teachings and also the books that I have read, trading books, all this, and I'm gonna share with you guys. But it should be taken as a general information, and if you find which of all this piece of information that can fit you, please take it and use it. Okay, but if you don't think that it fits you, just listen and that's all. Yeah, okay. Okay, so before I start my section, let me introduce myself. Okay, so in case any one of you guys who do not know who I am, my name is Elki. Okay, and I have been a stock dealer with M Plus Online since 2015. Prior to that, I was actually also a futures dealer with a very reputable Singapore company, and in the process, I also been selected to undergo training to be a professional professional traders. Yeah, so after all these trainings and all this learning process, exercise, trading in the markets, all this. When I joined as a stock dealer with M Plus Online, I actually found that stock is totally a different type of products, and I also suffered through a period of time trying to get all this thing up. Okay, so what I'm gonna share to you guys are some of the things that I learned. Yeah, that I learned and also that I discovered during this period of time. And of course, there are more to come, and I'm still learning, by the way. Okay, so hopefully, as the time it goes by, I can share more to you guys, and we can grow together. All right, okay. So what I'm gonna cover today is we're gonna go through all the 3M, trying to understand what are they and how they actually can affect, and actually we can deal with them and improve our trading result. All right. So today the section is, it will be less technical. For those who have been attending my section, you know that I'm a chartist. I have been technical analyst list, and I always been talking about charts, TA tools, all this thing. But today it is a really different section. Okay, so if you guys here today for really solid technical knowledge, step-by-step learnings, all this, then you might be disappointed. But I do feel that this section today here is pretty much crucial, because it can help some of the big new traders to understand the real part of about the trading, and also help some seasoned traders like you guys to get reminded some of the parts that you guys might forgot. Okay, yep. So what are 3Ms that I have been keep on mentioning and talking about? Okay, so when we talk about 3M, the first thing that come into my mind, come into your mind, is it this? Is it the tape by the 3M, or is it all these tools like the command hanging, like the mask, like the another other tape, or even they have this car washing, um and also Post-it is actually under 3M as well. The Scotch Brite, yeah, of course, under 3M. Yeah, so basically, I'm not gonna cover the stock 3M, okay, the company 3M, but what I'm gonna talk about the 3M is like what I have mentioned at the beginning of the section. It will be the methods, the money, and also the mind. Okay, that we need to look into all these three aspects to help us achieve the success in trading. Right? These three are the very important elements in trading, whereby if a trader lack of any parts in his trading life, it's very hard for him to be successful. Okay, imagine one who has able to manage the money well and have a very good mindset like a trader, but he do not know how to trade, and of course he wouldn't be able to be successful in trading. But if someone who have the method, but um, and also have the mindset, be really disciplined, but every time when he trade, he just all in, disregard all the risks that gonna involve, very high chances he gonna fail in the trading as well. Okay, so all these three elements, they are really important in our trading, and let's look into each one of them. What are the aspects that we can look into about all these three elements? Okay, so when it comes to trading, the I believe many of you guys, so especially for some of you guys who have been trading for some time, I believe you guys experience a lot of blocks and also a lot of hurdles. Okay, sometimes from the method wise, some of you guys might find I do not know, I do not have a method, I do not know how people trade, or I try to learn from the website, from the articles, from the webinars, or even I try to explore some of the approach myself. And there are so many 1,001 approach in this world. Okay, so which one is the correct method, or which one is the so-called the holy grail method that can help me to make money consistently in this market and help me to get rich? Yeah, so many of the traders, they will have this issue, especially for those new traders. They have just joined in and trying to start up and learn trading. Okay, uh, but eventually, when you trade for some time, you actually realize that there are other people talking about this thing, risk and reward ratio when I trade. Besides knowing how to approach, how to get in, how to cut loss, all this, there are things people talking about, risk and reward ratio. How should I manage the money? How much should I cut loss for every trade? Maybe every trade the maximum losses that I can trade is 2%. Or how should I cut loss based on the technical, and what kind of trade that I should take, I shouldn't take. So all these things, it will come in after you have trading for some time and you are less worried about your methods. And eventually, when you have been trading more and more, then you also encounter the issue that I have a little bit more idea about how to manage my money, where to get out, where to stop loss, and which are some of the better trades that I can pick. But I have all this thing that coming and haunted me all this time. Like every time when before I enter trade, I might have fear of entering. I scared if I enter, what if it is a losing trade, or when I heard about some news, I will start thinking whether it's true or not. Okay, and of course, if I get a tip from someone, from a very good friend of mine, then I go all in. I have this grid that just disregard all the risks and just go all in one trade. Hopefully, it can help me to gao tim and make all the money in just one trade. Or if I have a losing trade on today, or on this trade, the next trade I will double up, or even go 50% of my equities trying to make back the losses. So does all these things sound familiar to you guys? If yes, don't be shy. Okay, it's normal because it happens to almost every single trader. You are not alone. Okay, maybe when you browsing through Facebook or some investment group or some telegrams, all these things, They had been talking about how successful they are, how much money they've been making, taking snapshot and sharing his portfolio, his position, or making 100, 200%, 300%. But many other people else, they are having all these same problems that I just mentioned, just that they don't share. Why they don't share? Is it normal that for people to share all these things, all these problems to another person? Do you share all this problem to another person, like your trading partner, if you have one, or do you share it to your wife or to your husband, or do you post your losing trades into the investment group? All this unlikely, right? Because people do not like to share unhappy stuff unless you hope you get some attention, get someone to approach you or what. Okay, otherwise human doesn't really like to share too many of all this so-called negative kind of posts or informations, especially on the social media. Okay, and also if they really put it up, and if there are so many people come approaching and asking, it's pretty tough for them to answer, especially for it will dampen a little bit on the self ego part as well. Okay, so that's why when you're browsing through all this Telegram group, all this or Facebook investment group, all this, most of the time you are seeing very positive, very good trading results kind of posts. Okay, but that doesn't mean that all these issues, all these problems that I mentioned right here, they are non-existent. Okay, they are there, and it has been always there. Okay, yeah, just that nobody talks about it. And yes, today I'm here to talk about it with you guys. All right, okay. So if you think that these are some of the things that some of your trading partners or your fellow friends, they should know about it. Okay, do feel free to help me. Click the share button and share it up. Okay, on your Facebook page or on your YouTube. Okay, so others they able to join and get a little bit of insight about this issue, because really in this market, not many people talk about all these issues. Okay, because what they want to do is they want to have positive flows and please the readers. Okay, but today I'm gonna be really honest and really frank to tell you guys, in the whole population in this planet, okay, for of all the traders in this planet, in this world, there are only 10 to 15% of all these traders are making consistent money. Okay, yeah, they are only 10 to 15%. So if today, if any one of you guys right here, you are making a consistent income or consistent profit from your trading for the past 2 years or 3 to 5 years, congratulations. You are one of those 10 to 15% which are successful in trading. Okay, yeah, so if you are, okay, please type I am. Don't be shy. Okay, I believe when you type I am, maybe you get quite a number of friend requests trying to add you as a friend in Facebook and trying to ask your secrets, how you can be so successful in trading. Yeah, okay, so if you are, please type I am. Okay, yeah, we will salute. All right, okay, but for those who are not able to make it, the remaining 85 to 90%, what happened? What happened to them? Why, despite they have been putting time and efforts, all these things, they are still struggling in this career, in trading, trying to be successful. Okay, so the 3Ms are the thing that have been dragging them down. If the trader able to go through 3M and fix all the issues they have in these 3 elements, the chances of them become a successful trader will become much higher. So that's why today we're gonna go through all the three M's, all the three elements, and you will have to ask yourself if you have all this problem. And I'm gonna share with you guys some of the solutions, okay, that I had been taught, and hopefully it can help you guys. All right, okay. So the very first one, methodology. Okay, I believe most of the traders outside, the one that they're really interested, it will be the methodology. Okay, because in a very common mindset is, if I do not have a right methodology, if I do not have a money making methodology, even I have the money management skill or I have the correct mindset, I wouldn't be able to become profitable. And yes, you're right, method is important, okay, but in this world there are 1001 methods that can help all of us to make money. Believe it or not, there are so many methods in this market that are able to help the traders make money consistently. Okay, the method, it can be fundamental driven, it can be technical TA, or even some research statistical database kind of method. There are so many methods. Okay, I even have been sharing a high probability winning seasonal methodology. Just buy in at a certain time and sell at a certain time every year. And for the past 5 to 6 years, it has been producing a consistent profit for the past 5 to 6 years, except for 2020 during the COVID year. Okay, besides 2020, for the past 5 years out of the 6 years, it has been profitable. And the max in a month, it gave more than 20% profits in a month. Okay, and it is a very, very simple method. But in order to have, but the method is very important, and it needs to be really simple and stupid, so that we can repeatedly use it and also keep on using it to have a consistent and a long-term winning result. It doesn't need to be 100% correct. It doesn't need to be profitable all the time. But in the long run, as long as it's able to produce a positive result, then it is a good method. Okay. For the method that I mentioned just now, out of the past 6 years, yeah, it doesn't score for all the 6 years, but out of the 6 years, 5 years, they are producing on an average of 10 to 15% of return, while the losing year on 2020, 2 years back, it only dropped less than 10%. So net out for the past 6 years is still making a very good total of about 70 to 80% of return in just one simple strategy. At a selected timeline, you buy this stock and you sell it at a selected timeline. Okay, that's simple. And for those who had been following my my webinar, my section, okay, you guys know which trading strategy that I have been mentioning. Okay, yeah. And if anyone of new audience or newcomers today, if you want to know, you can go back and find look back some of my old videos, old webinars. Okay, all the videos are playable. You may play back, okay, from our Facebook page. And a hint for you guys can try to look for the videos that focus on the statistical trading methodology, because it is a statistical approach kind of strategy. Yeah, so during the section, I share with them exactly why I've been selecting that stocks and why in that time frame. Okay, yeah. So if you're interested, you can look back on my previous videos and try to look for it. Okay. or if you wish for me to repeat it on next month webinar, you may type in the comment as well. Okay, if the response is overwhelming, then I can put in the request and ask for and try to plan for it for next month webinar. Okay, and for the methodology, besides it need to be simple and stupid, a very easy way for us to back check whether it's very easily to execute is we can try to write it down, okay, in a few sentences. As long you're able to write your methodology in just a very simple few sentence or a few lines of instruction, then you know that your methodology is very clearly defined, and you will be able to execute it repeatedly. Okay. So how do we, for those who do not have a methodology, or you have been trading without a very consistent or a fixed methodology, how do you find your methods, your trading methods? The very first one is you will need to make some observation, try to find a repetitive behavior in the markets. Okay. And yes, you can tell me, hey, okay, I do not have the time to watch the market like you guys every day, staring at the market and look for so-called repetitive behavior. Thanks to internet, thanks to the lockdown, okay, you can look for a lot of webinars that are available in the market. Okay, there are so many gurus and traders. They have been sharing their methods, okay, their method and also the way of trading online. Okay, so what do you need to do is you just pick one of the webinars, try to understand what kind of methods that he is talking about, and basically from there he when he is teaching the method, he will give you the hypothesis. So if like for a technical one, it will say in order for you to make an entry, you need to have the A, B, C. Okay, you need to see A, B, and then we will see the C, the market to be rally. Okay, so the A, B is the hypothesis, and what you need to do is you need to find all the A, Bs, do the data collections, and see the result, which is the C. Does it happen, and how frequent it happen? Okay, so for example, if we are talking about the golden cross, if 50 moving average line, it crossed above the 200 moving average line, we call it as a golden cross. And gurus has been talking about, you buy on every golden cross, you'll be making money. What we need to do is we just go into our chart and look for all the 50 MA cross, 200 MA for the golden cross, and then we gather the result. Whether if I buy on the golden cross itself or on the next day opening of after the golden cross, how is the result? How is the performance? Is it that the share continue to move higher, or if the share retrace and move higher, or the share it's at the high? Okay, what are the chances that the share gonna move higher from that? Okay, so once you got all this data, you can review and actually analyze if what the guru say is correct or not, or you can look back to ask yourself if the hypothesis is correct or not. And if the hypothesis, it does give you the high chances of winning, then from there you can form your strategy. You can allocate how much money that you would want to risk and test on this strategy, and how you would want to do it. Okay, when you're gonna do the homework, when you're gonna do the screening, how you're gonna do the screening, and how you're gonna execute it. Is it on mobile? Is it on preset limit orders, or what? Okay, so by doing this, we were able to come out and find our methodology. Okay, so for the method part, actually finding the methods, making the assumption, making the hypothesis, looking for the repetitive behaviors, these are the very simple parts. The hardest part is getting the result and and getting gather the data and getting the result and review back all these results. Okay, because these are very tedious work. But who tells you that making profits in this market is easy? Nobody, right? Okay, so for those who are new into the trading, in the business of trading, now I tell you that trading is it is very simple, sitting there and make your trading decision. But at the behind, these are some of the tedious work and some hard work, all these efforts that we need to put in order to have a good trading result, a good trading outcome. Okay, so if you have attended a lot of seminars, gurus, classes, all this, okay, and you are yet to have your methodology, try this. Try to get all this data and result, and from there, okay, you will know which is the method that you should be focused on. Okay, yeah. I still remember when I was started to learn my methods. Okay, my method is very simple. My method is moving average. Okay, my core technical tools is moving average. I remember I spending every day looking more than 1,000 charts a day, and have been um, collecting, doing snapshots on all this moving average line behavior for more than a year before I able to graduate and identify the move of all this moving average. Okay, so I study from the angle of the moving average line to the distance between the price candle with the moving average line, and the movement of the price candle with the moving average line. All these things we studied. Okay, we have the data result, and we know in under which kind of situation and conditions it will give us the best trading outcome. Okay, yeah. So this is how we need to do it in order to have a method. Okay, yeah. So that one is for the technical part. For fundamental parts, it can be a little bit easier, which you can there are so many fundamental approach in the market, like value investing, like strategy based on economic data, or even government policies, arbitrage strategy, or even some of the warrant conversion strategy. There are so many of them. Okay, yeah. And one downside about the fundamental approach is, when it comes to fundamental approach, the time frame that it can take, it will be much longer. So for fundamental approach, we need to really do the back testing using the um, all this news and all this historical happenings. Okay, and look back to what happened to the markets last time. All right. So, and also another downside about the fundamental approach is the economical environment. It has been constantly changing. Okay, so when it comes to fundamental approach, these are some of the variables that it's very hard for us to control, and hard to be exactly the same from the last time. Okay, especially like we know that we in the market, they had been saying that every 10 years we have a very big cycle. There will be a recessions or markets crash every 10 years. And what happened right now? The market crash is like, if we disregard the COVID, the 2020, okay, the market crash has been about like 14 years away already. Okay, so things, they do change. Okay, so when it comes to fundamental approach, sometimes the minor part, it can change. But right now we are seeing economy is slowing down. This time around is late by about like 4 years, 4 years time. Okay, compared to last time, it's always happened every 8 to 10 years. Okay, this time it's a little bit off by 4 years, because in the process of so many financial crises, the policymakers, they come up with a lot of interesting tools, like the recently the Prime Minister, Japan ex Prime Minister Abe, that just being shot. He is the first one that come out with the QE, started the QE, endless QE in Japan. Okay, yeah. So they come up with so many tools, and in fact, they prolong they prolong and delay the crisis by 4 years, or even 5 years, or it might not even happen. Okay, so these are some of the aspects that we need to know and we need to take into account when we are studying from the fundamental and trying to trade from the fundamental approach. Okay, yeah, but some of the simple one, like recently, I know everyone has been very actively, and this topic is very hotly discussed, like the interest rate hike. Okay, especially yesterday, like mentioned just now, the US inflation went as high as 9.1%. Okay, it was so high. One of the reasons is because the oil price that they use the average of June. Okay, and now we know that in the mid of June, the oil price actually has crashed. Okay, and trading the US oil trading below $100 mark. Okay, so hopefully by next month, when we see the July CPI data, it could be the peak in June and start coming down in July. Okay, but of course we do not know what all this Federal Reserve all this Fed's official, what Powell gonna do, what he gonna announce by end of this month. Okay, but today is not the first day where we talk about the interest rate hike. I believe we actually has been hearing about Fed's gonna increase the rate since last year. Sometime if we look back some of the old articles, okay, like in June last year, Fed start looking into increase the interest rate because since last year we had been seeing inflations, the building price has been shooting up, the oil price has been climbing higher, and during that time, Powell still think that the inflation it is just a temporary event. It's just a short term event. Okay, but after a year later, today we know that it isn't. Okay, that's why Powell stance, Fed stance, they had been very all right. Sorry for the interrupt. Okay. Somehow the electricity snapped just now. Okay. Let us continue. Okay. All right. Okay. Yeah. So we know that in last year June, Let me check my sound. Okay. All right, the sound should be okay. 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 Yep. All right. Okay. Yeah. Can you guys hear me? Okay. I'm trying to reconnect back the electricity snap just now. Okay. Sorry about that. Okay. This is totally unexpected. Okay. All right. Okay. So since last year last year Fed last year June we has been seeing that Fed started to talk about we might have an earlier interest rate hike, and eventually when it comes to into September, okay, they are actually speculation and talking about Fed has been seeing that we're gonna start increase the interest rate in March for next year, which is this year 2012. Okay, and even come to the December, they have pretty much sure that it can just come as soon as March. And eventually what we see in March, we had the first rate hike. Okay, so we can see even before Fed's hiking up the rates, okay, they have been signaling and hinting since 9 months back. Okay, since 9 months ago, they have been hinting, they have been telling all of us that we're gonna increase the rates. Okay, we're gonna increase the rates every time when there's a FOMC meeting. After the meetings, they have been talking about it for 9 years. After 9 months, sorry, not 9 years. Okay, after 9 months, it happens. Okay, and ours followed to after 2 months in May. Our Bank Negara Malaysia, we raised from our OPR rate from 1.75% to 2%. Okay, yeah. So in this period of time, in this 9 month period of time, if today you are a fundamental traders, okay, anything that you would have done or you could have done, okay, if we look into the financial services, we can see that during this period of time in June when the Fed has been talking about it, okay, in this period of time for the 6 months last year, it has been trading volatile up and down, but still at the base. Okay, and as the timeline approach, we can see exactly, we can see very clearly the financial services, the banks, they had been moving ahead, moving ahead, rallying ahead of the rate hike that happening in March. Because by that time, we are really seeing that it is happening. It is happening. The rate hike. Okay, yeah. So if we look into some of the banks, okay, some of the banks in Malaysia, okay, one thing that we want to look into, it is the variable rate loans, okay, because for those banks that they are having a higher variable rate loans, as the OPR increase, as the rate going higher, okay, they able to adjust their rates accordingly to the increase of the OPR rates and have a better margin from them. Okay, so we can see out of the total of a total of 9 banks, there are 5 of them having more than 80%, which are in variable rate loans. Okay, so and among all the one that having the highest one, it will the Bank Islam BNB. So if you look into the BNB past price chart, we can see that BNB actually it has down 33% from the June price when despite that the Fed's talking about they're gonna increase the rate. Okay, yeah. So the doesn't mean that we are wrong. Okay, so if we look into what happened last year, actually BNB had a 1 ringgit dividend. Okay, dividend payout happening in September. Okay, with Takaful. So that actually affected the price movement. However, we are still this if we take off this 1 ringgit dividend, we are still seeing the BNB down. It's still down by around 30 cents, which is less than 10%. Okay, but if we look into other banks like RHB Bank, which also able to enjoy from a higher variable loans, okay, rate higher variable rate loans, we can see that RHB Bank from June last year, it has been moved more than 15%, if more than 15% from June onwards. And for Hong Leong Bank, it's about 16%. ABNB is a very strong performance, performance ones. Strongly performed. It up more than 50. It up about 50%. Okay, from June all the way until its peak in somewhere around in April. Okay, and also CMB is up about more than 20%. Okay, to the peak in March. Okay, so what we are seeing is, if today you are a trader that trading based on the fundamental approach, these are some of the hints and also things that the policymakers, they have been hinting and telling you that this is going to happen. And if we take all these signals seriously and think what's going to happen, or even research back what happened when when the US increased rate, the Malaysia follow through, what happened to the banks, all this doing all this research, then these are some of the opportunities that we're able to capture from the markets. And of course, when we are looking at this, it looks very simple, whereby we just need to buy in June and try to hold through it even until today is still in profits. Still in profits. Most of the banks, out of the 5 banks, 4 are likely still in profits. Okay, execution wise, it's so simple. You just buy and hold until today. But behind the click of buying, there are so many works to do, involving doing the research, coming up with the hypothesis, understanding the impact of the rate hikes, all this. Okay, then only we're able to commit and convince ourselves to put this money on, risking this money to make this trading decision. Okay, so this is one of the example whereby we can come up with a trading methods. Okay, and we can go through the approach, that the five steps approach that we talk about. Okay, and when it comes to technical approach, like just now I said, there are so many technical tools in the market, like moving average, Bollinger Band, parabolic SAR, and I believe in the markets, in a lot of websites, there are a lot of interesting and also a fantastic way of using all these tools in a very different way. Okay, for moving average, some of them they say, oh, okay, moving average you can use for crossover, you can use for bounce, you can use for momentum move, all this, a lot. Okay, seriously, a lot. Okay, but what you need to do is you need to write out and list down the criteria. Okay, so if you are doing the crossover, or for which MA cross above which MA, what are you expecting? And you look back on the results. Does the hypothesis suggests when it crossover it should move higher, but based on the result, is it that most of the time after the crossover it really move higher? Okay, if it is not, then maybe you have to move to another behavior, which is, how about the bounce, the price bounce from the moving average? Okay, yeah, and does it give you a better trading result, trading outcome? And if yes, then you might want to stick with that and try to formulate a trading plan from there. Okay, yeah, so if you are interested and you do not know where to look for some of these technical webinars, tools, all these things, you can feel free to visit some of our videos right over here. All these are the TA videos, TA webinars that we have been sharing. Like we have the RSI strategy in the very recent one, easy to learn and apply TA in your trading. We have the trend line in Chinese. We have the stochastic in Mandarin. In BM, we have the market cycle. And English, we have our SMR, RSI, MECD, all this here. Okay, so what you need to do is you just scan this QR code right over here, and it will bring you to our Facebook, our so-called like the video collections. Okay, and from there, we have been making webinar consistently since 2 years back. So you can find there are really a lot of videos available right over there. Okay, and some of them they are my sharing about how to trade using all these TA tools, and most of them they are step-by-step guidance. Okay, yeah, so feel free to scan it and watch it. Okay, so after you have watching all this technical how to use it, all this thing, what you need to do is for data collection, you can do the snapshot, the pictures, or collecting the stats data, or even having the trading journal, especially if you try to test it out and trade it. Okay, so for all this hard work, you will have a very clear you have a very clear idea whereby the method it is performing or not. And the trading journal, it will tells you what are your problem when you're using these methods, and from there, when you are free, then you have time to think through it and how to overcome all this problem. Because when you are trading, your mind is all about the P&L and whether the market gonna move in your favor or against your favor. Okay, you will not have time to try to solve the issue and the problems that you are facing when you are trading. Okay, that's why it is really crucial to have a trading journal, so you can always look back and review what are the problems, and from there you're able to solve it. Okay, and when it comes to the result analysis, the very first thing that you really want to know is whether the method, whether it gave you a high probability of winning or not. And some of the issues of some fields that you might want to look into is for this method, on average, is how long is the holding period, and if this method is performing, or what is the trading range, how much meat that it can give you, whether worth it or not for your time. Imagine if this strategy only give you about like 10 cents. Okay, it only gives you about like 10%, but you need to hold it for more than 12 months. Then does it worth it? Okay, because if you actively trading, you might able to, if you make just 2% every month, you can make more than 24%. You can make 24% a year. Okay, then from there you're able to identify whether this method does it suits you or not. Okay, yeah. So Lucy is asking about the QR code for the trading tools. Okay, so after the section, I'm gonna go back the page and share with you, so you can scan the QR codes. Okay, Lucy. Okay, so just bear with me. Okay, all right. And we have been talking about statistical result, all this statistical result, and maybe some of you guys will feel that, does it really necessary to do so many work, collecting so many data, all this thing, just to just so that you can make the few clicks. Okay, if today you are here for a long-term career, you want to make money for living, trading for living. Okay, I would really suggest that you really want to do all this statistical result on your methodology. All right, because only when you have the result, and of course a positive result, that statistically positive result on your methods, then you will be able to invest more money or risk more money, okay, on your approach. Otherwise, maybe most of the time you're gonna just stuck with the same amount of money, and you will be unwilling to risk more than that. Okay, so if you wish to have a long-term progression in your trading, to improve and go from 10,000 to 50,000 to 100,000 to 300,000, 500,000, okay, you really want to collect some of these statistical results and also make your trading journal, so that you're able to identify your methods and how to improve it from time to time. Okay, so that will be the part for the methodology. Okay, so from that part, we actually have, I hope you guys have a clearer idea on how we're able to derive the methodology and why we need to spend so many efforts, and I'm trying to come up with the methodology itself and some of the tedious work we need to do in order to have a methodology that we are convinced by ourselves. Okay, yeah. So after done with the first M, the next one is the money part. Money part is very important, especially if we has been talking about trading is a business. If you fail to manage your money, regardless how good is your business, most likely you're gonna fail your business as well. Okay, so when trading is a business, it's very important for us to manage our money efficiently. Okay, we need to understand what is the cost and what is the return on investment for every single trade, or using the method to trade the for this method that we're gonna use, and what are based on some of the type of accounts, what are the opportunity and what are the costs, and actually what is our risk that we're gonna encounter, what kind of risk that we're able to accept it. And besides all this, we also we also need to look into how we're gonna manage our trade so that we able to manage it more efficiently. Okay, and maximize our result, our return. Okay, so the very first thing that we talk about is the cost. Okay, I believe for those who do not know, every time when we make a transaction, there are some costs. Okay, some costs. The two fixed costs, it is the clearing fee and stamp duty. Okay, clearing fee and stamp duty, which charged by the government and also the Bursa. Okay, and the next one will be the brokerage, which charged by the broker. Okay, so for clearing fee stamp duty, they are fixed at 0.03% and 0.15%, while the brokerage, it depends. It depends on which type of account that you are having. If it is cash, it can be with M plus, it can go as low as 0.05%, or if it is a collateral, it depends on what kind of collateral, whether it's a T3 or T7, and whether you are using the flexi features in our collateral account or not. Then it will give you a different brokerage amount. Okay, all right. But besides the cost itself, the monetary cost, we need to take into consideration of the opportunity cost as well. Okay, yeah. So imagine today you are seeing this. Imagine today I tell you that, okay, Maybank today gonna move 2 ringgit higher. Okay, 2 ringgit higher. It guarantee can move 2 ringgit higher from right now. It is at 8 ringgit. It's gonna move 2 ringgit higher, which means it's gonna move 25% higher. Okay, but I tell you this: when you trade, I need to charge you 5% for the fees. Will you take it? I believe most of you guys right here, you will say, yeah, of course I take it. If I take it, I trade it, I can make 25%. What is 5% fees that I need to pay? I still can make 20%. What? Okay. Yeah, so this is the opportunity cost that we are talking about. Okay. So if today you are trading using the cash account, okay, then you will need to know that how you gonna prepare yourself so that you don't miss any of these opportunity costs. Or if you're trading collateral account, how you gonna manage it, whether using the share margin account so that you can have the limits over time right over there, or how you divide your portfolio with some of them 50 to 70% they are in the long-term position, blue chips, they are blue chips counters, so that you always have collateral limit ready there for you to capture all these opportunities. Okay, and of course the brokerage, the highest it can go is 0.7%. We cannot go as high as 5%. We cannot go up to 5%. Yeah. Okay, that one just an example. Okay, so the opportunity cost, we need to consider all these opportunity costs and we need to arrange it accordingly. But how to decide whether you need to take a cash one or you need to take a collateral one? So you need to refer back to your lifestyle and match the choice accordingly with your lifestyle. If you are going through a slower and more steadily life kind, you might want to consider cash upfront account rather than those very fast-paced collateral accounts. Okay, yeah, because you might not be as aggressive as the rest, but you are more towards accumulating the shares, collect and hold it kind of type, slow and steady. But you can take advantage of the trust interest. Okay, so if you have a little bit more money inside the account that unutilized, you can stand by it into the trust and you are still making interest out of them, and you have the flexibility to withdraw. And some more right now, there are so many worries about keeping the money in the banks. Might have some scam calls or message and some illegal transferring out, stole from the accounts. You can keep it with our trust, and so far it's still so far what I heard is very safe lah. Okay, keeping with the broker trust. Okay, and you do enjoy up to 1.8% interest per annum. Okay, or if you are an aggressive type of traders, then you might want to look in leverage on what you have on whether your shares collateral or leverage on the money that you put in, and maximize the returns of on every single opportunity that you can see. Okay, aggressive, it doesn't mean that every day you must trade and also every single trade you must take it. You might want to be like a sniper, look for a good trade and you leverage to the max, so that for every single opportunity that you see, you max it for the returns. Okay, using all these options, using other people money or using the limit that you got it from the collateral, and maximize the return from that. All right. Okay, and of course when we talk about the risk and return is another aspect that we do really want to look into. Yeah, as a trader, we must always able to recognize what is our risk appetite, what kind of person we are we risk averse, or we are always go on for the high risk type, and of course what is the amount that we are ready to lose. Okay, please do not borrow or please do not risk some of the important funds to invest or to trade. Yeah, okay, because from mentally we will not able to accept it. When it comes to the fear of losing the money, and most of the time based on the statistically, it tells that you will make a lot of wrong decision if you are risking some of the money that you shouldn't be risking. Okay, so do ask yourself what is the amount that you can afford to lose, and you'll be comfortable to lose, and only trade within that amount. All right, okay, but it doesn't mean that you will definitely lose it, but it gives you the sense of, okay, I'm really prepared this amount of money to risk it. Okay, because every time I trade, that is always a risk. Okay, but I will try to perform the best. Okay, do the best on the methodology part, and also fix the mindset, form the trading plan, all this thing, and do my best to make it. And if the trading plan it doesn't work and has to cut loss, at least when you already have the pre mindset that you might lose it, you're able to cut it and control your losses as planned. Okay, yeah. So you really want to, based on how much that you can lose mentally, you're able to lose, you can accept it and determine your trading size. Yeah. So for example, imagine that you are a rich lady, which you can buy a LV bag with a price tag of 20, or you spend 20 or 30,000 every month buying an LV bag. But when it comes to stock, you just trade about like only 2,000 units with a P&L for one trade is 100 to 200 ringgit. Then you might you might not being excited, you might not even willing to put in so much effort to in order to do all this trade, because for you the P&L is too little, while you every month easily you can spend 20-30K in on a bag itself. Okay, so in this case you might really want to up your size to a significant size whereby you will take it seriously and also put efforts to make sure you are winning. Okay, or on an opposite case, if you are those who have a slightly lower salary and you're really super savers, every time when you spend, even during anniversary meal, all this, you spend maximum 100 ringgit per meal. But but after all these savings, you use this money to trade in the market, and your losses per month can go as high as 10,000. Then it wouldn't make sense as well, because um when you are savings and you are willing to spend the money in your daily life, when it comes to trading, imagine that when you're losing 1,000, indirectly, unconsciously, you would think that, oh shit, I lose 10 meals, 10 good meals of my normal 10 good meals in one trade. Or even maybe that happened within just a split seconds or a few minutes, you lose 10 good meals, 1,000 ringgit in just a glance. Okay, psychologically you would not as able to accept it, and it might cause you to do some of the crazy thing, like, oh, I must make back the 1,000, I cannot lose that much. I try to double the size, I try to take some high risk trade, I cheese back and buy, hopefully I can make back the 1,000. All this. Or even if you are making if you're making, imagine that you think that the price can go and give you a profits of 2,000 or 3,000, but once you are seeing 400 or 500 profits, then it will come it will haunt you in your mind, saying that, hey, if I take profit right now, I can have a very good meal for of good 4 to 5 meals ready. I can treat my wife or my girlfriend to good meals. We can even go 250 per person by taking this 500 ringgit profits, and by that you might just take out your position rather than hold it all the way to 2,000 ringgit. So you can see all this, it will really affects your trading decisions regardless your view of the market itself. Okay, that's why when it comes to money management, once you have a method, you really have to master the money management as well, so that you can make the correct decisions and trade based on what you have researched on the methods. Okay, and last but not least, we will talk about slightly about the trade management on how to pace the entry, and how we actually can lower the risk by trailing up the stop itself, and also controlling and being selective in the select, being selective on our trade, and deciding where is the stop loss point to have a positive risk and reward ratio. Okay, so some of the examples, like pace the entry. Okay, we can see this chart. This is a Mieko chart that had been rallying in the year of after post COVID, where everyone has been staying at home. The demand for furnitures has been higher. Okay, but you need to ask yourself: are you those kind of people who wish to collect when the price is at bottom, going nowhere? You buy and keep kind of type, or you are those kind that you will need to see immediate money? Then in that case, you might really want the price to go slightly higher, wait for a technical break, then you just participate as the price rallying higher from there. Okay, so the entry, you can do it in many ways. You need to ask yourself, what kind of person are you? You are those accumulator type and don't mind waiting for 3 months, 6 months, 1 year, or you need to see immediate money kind of person. Okay, so from there you're able to determine what kind of trading methodology that you need, and and how we can lower down our risk when we are trading all these methods is, we once we are enter and the position in our favor, what we can do is, as the price making a new high, okay, we can trail our stock from on initially at this area at the circle, the one that circle, we can move it up higher. Okay, so when the price has been trading higher and higher, we know that the maximum, the max that we're gonna have is we're gonna make lesser rather than losing. Okay, by doing so, when we are trailing the stock higher and higher, okay, as it make a new high and a higher low, from there we're able to protect our profits and also lower down our risk when we are trading. Okay, yep, right. And the last one about the risk and reward ratio. When before we select a trades, we really want to look into where are the potential upside like for the Gamuda. This today the Gamuda, it has been stalling, and we see some of the articles been talking about the MLT3 gonna start gonna have gonna have progress by the end of this year. Okay, so Gamuda could be one of the beneficial from it. And if the share price are reacting positively towards it, we want to know what is the potential upside based on the technical. It might in the very short term come to 3 ringgit 75 cents, which give us a 4 ringgit 50 cents, a 4.5% return. But if we put our stop loss all the way down to the recent low at 3 ringgit 33 cents, then we are seeing a negative risk and reward ratio whereby the upside is 4.5% and the downside is as much as 7.2%. And if we see this kind of situation, we might do not want to participate in these stocks, but we also can review to see that since this one is a short-term trade, if we see that the share price break below 3 ringgit 50 cents, then we might do not want to engage anymore because we might see further selling to 3 ringgit 33 cents. Okay, so if we reduce our stop loss and put it at 3 ringgit 50 cents, we can see that from a negative risk and reward ratio, we're able to move into a positive one with, if we can make approximately 4.5%. But if after we enter, if it didn't come and break lower, we might only lose 2.5 to 3% only. Okay, so in that case, in the long run, for if I'm having a positive risk and reward ratio and have a 50% winning probability, then I will still be in profits, because when I make more, slightly more, and when I lose slightly lesser. Okay, right. Okay, so lastly will be the last M, which is the mindset. Okay, yep. So if we look into this chart, we can see this is one of a very typical market cycle whereby the share price has been accumulating at the low and has been trading higher, and eventually it has a almost 90-degree spike up and retrace from there. Okay, we can see throughout the whole process of this market cycle, there are so many emotions inside, from very cautiously trading, and finally when it move up, the traders become relief and hoping for higher, being really confident and convicted to it, adding positions. Great, seeing that right now it's from 4 ringgit, it move all the way to 30 ringgit, it can move all the way to 50, 100 ringgit. Okay, and eventually when we have a very sharp drop from 30 ringgit, the very first thing that come into my mind is it is a technical pullback after such a strong rally. Okay, it will come back. Maybe I want to consider to add some positions. Okay, eventually when the price trending lower and get lower, instead of denial, we're gonna go into fear or even panic. Okay, in demand, we might just cut off the position. So we can see in one trading cycle, there are so many emotions inside, and the price movement itself, the market movement, is actually reflecting all these psychological and also psychological driven actions and also emotions in the market. So the market itself is just a result of how the market trading participants they feel from most of them. Okay, and if a trader is carried away by his emotions, the trading result is likely to follow the 85% of population that we say that they are still struggling in trading, and finding it difficult to be consistently profiting, because every time when they trade, they try to make decisions. Emotions will come out and carry them away. Okay, and it will put them into the mouth of all these big shark or big traders. Okay, yeah. So if you some of the actions that can be resulting from the emotions, it can be like hesitations, FOMO, fear of missing out, taking the profits too soon, or I'm willing to cut loss, or better, I averaged down. Okay, and I got a little bit too confident. I have all this sloppy entry. Okay, easily I just in all this. Okay, so if you have any of all these things that happen to you, and then yes, okay, you do have you do encounter some problems and some issues about your trading behavior that uh, that that uh, that involve the mindset, the emotions. Okay, so how do we able to overcome all these things? Okay, the very first thing that we need to do is we need to recognize it. Okay, if you do not know that you have this issue, how are you gonna able to overcome it? First, we need to recognize that yeah, every time when the share price every time when the market talking about these stocks and the share price move higher, I would turn greed. I I will be really greedy. I will keep on hoping it can go higher and higher, and I'm willing to take profits, or even I will add up the size trying to push to get more profits. Regrets that I didn't buy more at the lower price, but I will chase it. So if by talking to yourself and also recognize these are your trading pattern, you're able to embrace it, and from there you will be able to take some precautionary steps. Okay, the very first one is, of course, is set up a trading plan and push yourself to be follow the trading plan exactly. Okay, the only time that we can think logically, okay, think logically and plan logically is when we do not have a position. So that's why it is so important for us to have a trading plan ahead of getting in a position. Okay, so make sure you have a trading plan and always check back to your trading plan. Is this something that you should be doing based on your trading plan? Okay, that would be the blueprint for your trading decisions when you already have a, a position on hand. Okay, then next you really want to recognize some of the alert points, like when for those who let's say fear of missing out. Okay, you might have the issue of fear of missing out when you miss the previous trade. So if you miss a trade, then you need to tell yourself, hey, okay, I just missed a trade. Next, I might be a fear of missing out and cause me to just simply jump in for a trade. Then I might want to take a break. I might don't want to trade for today. Take or even for the next trade, I want to trade maybe just half of my normal size. So you have, by having the alert points, it can help you to make a different decisions, and eventually the decisions can help you, okay, in the long run. It's either reduce the risk or even help you to avoid some of the risks that might happen. Okay, so you need to determine and set all these sets of action plans even before you start entering the position. So when you have the alert points triggered, then you know what are the things that you should be doing. Okay, and of course, from time to time, humans, every one of us, we are not perfect. There will be time that we might violate the rules. We might not doing what we have been taught to ourselves, and we really want to consider to put in a punishment so that we don't just get away after we violating the rules. Okay, so that will help us to be disciplined and follow what we have said earlier. And in the long run, that would help you to be focused and following what you have planned and have a better trading mindset. Okay, yeah. So after talking so many of them, the methods, the money management, all this. So which end to tackle first? Okay, it really depends on what stage are you right now. If today you are a beginner, then maybe you want to look into the methodology first, because you will really need a method before you're able to start thinking about the money management or even start thinking about the mindsets. Okay, only when you have a consistent method, a method that you believe that you can make money, then from there we can move forward towards looking at how you manage your money, how you manage your trade, how you decide that how much that you're willing to risk and lose, and when you make, how what is the reward that you are looking at, so that you have a certain return of ROE every year, or even every month. Then from there, only we look into the mindset. But of course, we do look at it from time to time. Understand every time when we trade, or even when we do paper trade, what are the issues that might happen and cause me to react in some way that so-called wrongly, okay, that not supposed. Okay, so from there you were able to fix the mindset and at least identify the issues, and slowly you're able to switch it over. Okay, so even professionals, some of them, if they do not have the correct mindset, they could easily turn a profit making strategy into a loss making one. Yeah. Okay, so it for new traders, you might really want to focus on method first, then money, then mindset. But for seasoned traders that have been trading in the market for so long, you have a method, you know how to trade all these things, then maybe you just focus on your mindset. Because if you have the method, if you know how to manage your money, but if you do not have the correct mindset to trade, then the result is most of the time you will still be struggling as well. Okay, yeah. So if you want to know a little bit more on or talk about the mindset problem, or some of the emotions issues, all this that you have, you can always feel free to look for me. Okay, my name is Elki and I'm based in KL. Okay, you can even Dropbox our M Plus Online to tell that, hey, I want to talk to Elki. How should I approach him, or what, or drop your contacts or contact number, all these things. Then from our side, we will contact you and we can talk, and we can even provide some of the ideas that can help you to improve your trading result in that sense. Okay, but if you are a new traders, you are looking for methods, all these things, I would suggest that you can look back for our videos. Okay, so Lucy, she was asking for the QR code, so later on I'm gonna share the QR code again. Okay, yeah. Okay, so from there you're able to see what are the methods that are available in the market, and we have been sharing, and you can pick up from there. And of course, if today you're not a M Plus client and you haven't joined us yet, okay, please do feel free to scan this QR code. It will lead us to our online account opening page. And what you need to do is just fill in the details, and for the DR code, you can fill in D200 or D300 so that you can join my team. Okay, you'll be under our care, with a professional dealer attend to you once your account is open. And also we provide all these unique insights and share with you the opportunities in the market from on a daily basis. Yeah. Okay. Yeah. So if you have any questions, you also may feel free to put it up right over there under the comments. Okay. And yeah, this webinar, it takes slightly longer. Yeah, we overshot by about 10 plus 20 minutes. Yeah, and sorry about that. Okay. All right. Okay. So if you have any questions, you can feel free to share it out right now. Okay. And for Lucy, yep. Okay. For those who wish to, access to our webinar page, okay, for all our videos, you may scan on this QR code, and it will lead you to our Facebook video page. Okay. Yep. So if you have any questions, you can feel free to ask it right now. Okay. All right. From Lee Hee Leong. Okay. Difference between interactive chat versus M plus, which which one commonly used? Okay, all right. Okay, basically for M Plus Wiz, it is an upgrade from interactive chart. Okay, it is an upgrade from interactive chart, whereby for the M Plus Wiz, it comes with alerts. Okay, let me share with you a little bit on our M Plus Wiz. Okay, this is our M Plus Wiz chart, and right over here, we have the indicators. Okay, and one thing that's additional one is this alerts. Okay, for our M Plus Wiz, the chatting tools, all these things, they are still there. They are there. Okay, but with M Plus Wiz, it has these additional functions called alerts, whereby you can put in your favorite stocks into your watch list, and also you can amend the trading rules accordingly. Like if you want to see some of the stocks that meet the resistance breakouts, or some of the MACD bullish crossover, bullish centerline crossover, uh, some of the stocks that have volume increase and price breakouts, all this you can take it up. Okay, and we do have some of our M Plus online rules as well. So once you put on it, from the opening of the market, it will trigger once it meets the criteria, then it will start triggering on real time. Okay, yeah, on real time. And for those counter that highlighted in blue, these are some of the counters that we recommend it to trade in short term. And also the yellow one is the counters that you have included um into your monitor list. Okay, yeah. All right, so you can see I have Kawan right over here, and Kawan is inside one of my daily list. Okay, yep, Kawan is inside on the 10th. Okay, on the May 10th one. Okay, yep. So that one is that one will be on the on our okay, that one is on our M Plus Wiz Pro. Okay, and Ringo Julius, you're asking about the trust account. Okay, so for the trust account, when you put the money into our trust account, there is you'll be receiving interest on monthly basis. Okay, so for any amount that you bank in, uh, less or equals to 100,000, it will be 1.45% per annum. All right, and also for the amount that's above 400,000 to 500,000, it will be 1.65% per annum, and also more than 500,000 is 1.85 per annum. Okay, so the this interest is daily, right? So every day it will based on the trust amount that you have, and it will determine your interest. Okay, and by the end of the month, it will credit into your trust account. So if you already have trust in money inside your trust, you can look back on log into your PC platform and go into your either your monthly statement or even cash movement statement. You can see by every month end there will be trust credited into your account. So that one is the interest rates that our trust is giving you. Okay, yeah. So yep, and for if you put the money into the trust, the withdrawal is very simple as well. If you submit the withdrawal before 9 a.m., you will receive the money on the same day in business day lah, the same business day. Okay, so for the withdrawal, it's very simple as well. If you know that tomorrow you want to withdraw tonight, you can submit the withdrawal request, and tomorrow evening you will get the money. Okay, all right. So that's why I said if you have a little bit unutilized money, instead of keeping it in the bank account, which you get less than 1% interest, why not you put inside the trust? And in that way, one thing is you earn the interest. The second thing is you always have the bullets to get ready for the opportunities in the markets. Okay, and TA Pro, no. So if you can right click on your platform, okay, you can right click on your platform, and for whichever that available right over here, these are the tools that are available for you lah. Okay, I believe there's no TA Pros options right over there. Okay, and Elaine's, all right, Elaine's asking about any tutorial video on how to use M Plus Wiz. Okay, Elaine, if you scan on this QR code, okay, if you scan on this QR code, you can find some of the videos about M Plus Wiz Pro. Okay, yeah, we M Plus Wiz Pro, we launched it for a very long time already, so you might need to scroll a little bit more, then you can see some of the videos about the M Plus Wiz Pro. Okay, yeah. Okay, so I think that will be all for tonight. Thank you very much for attending the sections, and if any of you guys haven't have the QR code to open the account, feel free to scan it now, or you can take picture and share it with your friends so that they can open the account with us. Okay, so thank you very much for joining our sections, and I wish you guys a very good night. All right, okay, have a good night. Thank you for joining. Bye bye.